Hello, this is Jordan. This video is being recorded on the early afternoon of Wednesday, April 12th, 2023. Thank you so much for joining me today. In this video, I'm going to talk about breadth and a short-term bullish signal for the gold stocks. So let's get right into it. I only have two charts. And first, we're talking about breadth thrusts. And to use this, I look at the advanced decline line and I look at how it changes over very short-term periods. Now, looking at the stock market, I know that there's the Zweig thrust and there's other thrusts that people look at. And one thing I read, I just Googled and looked, and one thing that came up was a 10-day breadth thrust, where breadth goes from being really negative at one point to then really, really positive over a 10-day period. So that kind of change is significant. And the reason why breadth thrusts are important and can be a really good leading indicator is because breadth overall is a great leading indicator, because you're looking at the performance of the market or a sector. And when the market or the sector is at its strongest point and healthiest, it has the strongest breadth. It has the strongest participation. So a market can rise if a small amount of stocks are performing really, really well and maybe the rest are only flat. But that isn't the healthiest situation. The healthiest is when a market or sector is rising, and it's because you have a large percentage, like 90, 95% of those stocks are all rising. So that is when a market or sector is at its strongest point. And typically, it depends on what, if you're looking at performance over, 3 months or 1 year, 6 months, or a couple years, basically, when you have the strongest breadth, it probably happens before you get to the middle of the move, and then it encompasses, most of the middle of the move. And then by the time you get to the last, 25% or 1/3 of that move, that's when the participation, the breadth, starts to fall off, and only, fewer and fewer stocks are driving the market higher. So that long explanation aside, this is what I like to use for breadth thrusts. I like to look at the 15-day performance of the advanced decline line, also the 20-day and 25-day. I threw in the 20-day. So there's a third indicator there. We have GDX at the top. We have the advanced decline line there right below. And then we have the rate of change for the advanced decline line over 3 different periods. Now, if we're looking at before where we are right now and looking at the last 10, 11 years or so, there's 2 clear points where you have a breadth thrust, and that's in early 2016 and also 2019, right before or right at the time when the Fed cut rates for the first time in a while. I mean, you go back to 2016, you actually had a positive divergence in the advanced decline line before this happened. And by the way, you had the same thing now in March. It was a very tiny positive divergence, but a positive divergence nevertheless. But getting back to 2016, so looking at the last 10 or 11 years, you can see the clear levels where the readings at the bottom, where they had to go to have a real breadth thrust. And so you look at the 15-day, the 20-day, the 25-day, and we're looking at the last 10, 11 years. There's 2 clear points where you can see, where it really sticks out, where breadth was absolutely the strongest. And again, that was beginning of 2016 and, right in the middle or a little bit before in 2019. You can actually see it, look at those readings in April or May 2019, and they were pretty negative. And then a couple months later, they were strongly positive. So 2016 was a little similar, although it doesn't stand out as much. But 2016, that breadth that you had was the strongest in quite a while. You'd probably have to go back to, maybe even 2009 or 2010 possibly. Maybe at one point in 2012, there were some rallies in there. But, nevertheless, that was really strong breadth. And look at the highlight at the very top there in the GDX panel. The market, GDX after the breadth thrust, it went up like another 60%. Now you look at 2019 after the breadth thrust, the market went up another 20%. And one thing I want to say, the importance of breadth thrusts, you want to see them after a correction or after a bear market. It has to be after a significant decline. I mean, if we actually look at 2020, right before the market peaked, we were pretty close to getting a breadth thrust. So that's not a good sign if you're getting a breadth thrust after the market has already appreciated quite a bit, because it's more of like a signal that the market is kind of like, it's a last thrust. The market's going to get exhausted after that point. So again, you want to find these things, they're after a bear market or after a correction or really early in a new bull market. And so that's what we saw in 2019. I mean, you had the rally from the summer of 2018 into early 2019. Then you had the correction, and so the breadth thrust came immediately after that, which is very similar to what's happened now. So looking at the here and now, if we look at the 15-day and the 20-day, the 25-day, they're all hitting that threshold of where the other 2 days hit. And by the way, if in the next day or two, the 25-day thrust is going to be even stronger, because if I measured it by 23 days, it would be, I think, just as strong as the 2016 one. So the 25-day one, obviously, it's a little bit delayed compared to the 15-day one, but that is going to get even stronger. But so looking at these thrusts, I mean, we are basically seeing the strongest breadth thrust since early 2016, and only the third in the last 11 years or so. And so this is fitting all the parameters. This is a really, really bullish signal. And so GDX, what this tells you is that the market is very likely to continue higher before there's any severe or significant pullback. And so, one way to try and figure that out is look at resistance. So we can look at where is the next stiff resistance. And for GDX, it looks like that's around 40. So even, another 5 points or so, what is that? 13, 14%, 12%, something like that. You can do the math. That's not terribly strong considering what happened in 2019, where you had a 20% rise after the thrust, and then 2016 GDX went up another 60%. So perhaps that means GDX could continue past 40 and maybe it retest the high at some point over the next 3 or 4 months before you get into a big correction. But, targets and all that projecting aside, the key thing is breadth is really strong in this market. We have a breadth thrust again, and the market is going to go higher in the short term. And so one last thing, speaking about breadth here, here we have GDXJ, which, by the way, 47, 46, 47, that's really significant resistance for GDXJ. Also, you have 50. So those are the potential targets I would look at. Now, looking at the indicators here, we're looking at the very bottom, that's the number of new 52-week highs, also smoothed by a 10-day moving average. Then you have the percentage of GDXJ stocks trading above the 200-day moving average. By the way, this data is 2 days delayed, by the way. And so if you look at the if you look at both those two indicators, there's still a lot of room that they can run before we get to the point where the market is probably going to have a sustained correction for, perhaps more than a month or two, or a sharp correction for a month or two. And so looking at the percentage above the 200-day moving average, I smoothed that with a 20-day moving average. And so the dashed line is around 79, 80%. That's where we are now. And look at how many times, I mean, that line is not back to where it was in January. It's well below where it was in 22, well below 2019 as well, 2016. And then looking at the bottom for the new 52-week highs in GDXJ, and if you look at the 10-day moving, I mean, you can see it. It's only at 7%. So what we're at with, or where we are at for this market is we're at a point where it's getting a little overbought, but that's a very good thing because we're coming out of a bear market. And so that's what the breadth thrust confirms. And so, as to when this rally will stop, look at the weekly and monthly charts and focus on the overhead significant resistance levels. And so there's still, at least another 10, 12, 13% for the market to run. So those are my thoughts in the short term. Let me know what you think in the comments. I'll talk to you guys again in the next video.